It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And we're back with another Trading Stocks Made Easy episode, all about the stock market. Hey, it's Tyrone Jackson. I'm the wealthy investor. This is episode 243. All about sectors. I want to try to explain to you what's going on in the market right now. But right before I jump into these sectors, so many of you loved episode 242 with my very special guest and friend, Andre Blake. If you haven't had an opportunity to listen to that, I highly recommend that you do, because at the time that we were recording, the tech sector had a serious pullback. And here we are just a week later, and the market is back up. And that's why we can't take too many of these pullbacks too seriously, because they last for a week or two. Your favorite stock goes down. People say, oh my God, Tyrone, what should I be doing? And I say nothing. And a week later, what happens to your favorite tech stock? It starts to retrace right back up there. That's what happens when you have an overabundance of algorithms trading in the stock market. So let me just give you this quick lesson. They say 80 to 90% of all stock trading right now is done by algorithms. An algorithm is a software program that someone has written so that when certain sectors in the market rise, it automatically buys more shares. When certain sectors in the stock market decline, these software programs or algos sell shares. So if you've ever been looking at your account and all of a sudden you see a big up day and you can't find a reason why all of your favorite stocks are rising on that day, algorithms. Or if the market suddenly declines significantly and you're thinking, why is my favorite stock down? Algorithms, right? So no matter how much I can teach you how to trade, in effect, these days, there are times when we are trading around algorithms. This is why I love cover call writing so much, because in the end, whether your favorite stock is up, down, or staying the same, there's always money to be made. All right, today I want to give you my take, and again, this is just my take, on popular sectors of the marketplace and why one sector moves above and beyond another. Understanding sectors is different from understanding allocation. So, for example, if I were going to start trading in the stock market with, let's say, $30,000, and I were going to employ the wealthy investor approach, I know that 1/3 of everything that I own should be invested in Dow stocks for the long term. The allocation really speaks to how I'm putting money to work in the stock market. So if you're one of those people that has money in mutual funds, can you tell me the allocation used to manage that mutual fund? That's something you should know as an educated retail investor. Well, I'm going to talk about what sectors are hot and what sectors are not and how they get that way. So make sure you listen to the end of the show. All right. So sometimes when I'm teaching live, I say to people, essentially there's two categories. Wealth preservation, meaning I'm already rich and I want to get a return on the money that I have, or wealth creation. I'm simply trying to grow what it is that I have. Well, if you're growing the value of what you have, which is money invested in the market, you have to be aware of what sector you're investing in. So if you've ever heard of people who suddenly became multimillionaires in the stock market, I guarantee you they had a bias towards one sector. So for example, 30 years ago, the stock market was absolutely fascinated with the tech sector. But what specific aspect of the tech sector? Well, software. Right? So there are people who made millions and millions of dollars holding shares of Microsoft and holding shares of its rival at the time, Apple. Apple had its own ecosystem it built around its software, which in the eyes of some people ran much better than the Microsoft ecosystem. Well, now software companies have evolved into broad-based technology companies where they're not just writing code and operating systems, they own brands, and most importantly, they're getting ready for the next wave in the stock market, which is artificial intelligence and what it'll do for the world of technology. But if we were to go back historically, one of the things I can tell you for sure is that there was a time when people got rich owning oil stocks. You may have heard about that, right? Because 65 to 80 years ago, oil was a big thing. Transportation was a big thing. And if you had access to the stock market, there was no technology like we have today, you could have bought shares in a company called Standard Oil. Have you ever heard of that? Yes. And then growing up, one of the things that my father used to talk about all the time was owning shares in telecommunications or the phone company. Now, if you're like me, you remember when there was a phone company and we used to pay them on a monthly basis to keep our phone service on. Obviously, the world has changed quite a bit. Now we're paying the phone company or technology companies to have internet access, voice over IP, cable, all in one bundle. But there was a time when the oil sector was huge. Now let's talk about oil stocks in the most popular in the oil segment, and the oil sector. The most popular companies are, of course, Chevron and ExxonMobil. ExxonMobil's ticker symbol is XOM. You could still buy oil stocks and invest in that sector today. The difference is, in the U.S., those markets have been established, right? We know that that ExxonMobil and Chevron are in the refining business of creating gasoline and home heating oil, right? So if they own 80% of that market, where's the room for growth? The only room for growing is price increases, right? So the oil sector in the stock market, there's money to be made, particularly on dividend-paying stocks that are part of the oil sector. But the growth is pretty much established. Remember, Wall Street loves growth. They love companies that have the room to grow their revenue and take something called market share. Well, when there's a sector that's not really feeding Wall Street's desire, that sector stabilizes, and we see that in the oil sector right now. Great sector if you like dividends, right? Because these companies are established around the world. They pull in billions and billions of dollars per quarter, and you could participate. But the oil sector right now is really a sector for people who already have established wealth. If we were to move on and we move into the retail sector, stocks like Walmart and Target, is there room for a lot of growth? Yes, there is, but consumers have their favorite brands and they have their favorite retail outlets, which nowadays every retail outlet is really in the digital business, because why order from Target directly if you could order from Target online? So Target and Walmart have done really, really well at adapting to the new world reality. They have their actual physical stores, and then they have their online component, right? And they're constantly trying to drive traffic to both aspects of their business. Now, you notice that Bed Bath & Beyond is no longer around, right? Because some companies could not make that transition from retail to digital. They just simply didn't move as fast, and then other digital retailers came online and took market share. And that's what Wall Street is all about, investing in the companies that look like they're going to dominate or sufficiently participate in their sector in the future. Now, this retail sector is rather large, because you can also include in retail Home Depot, Lowe's, right? Those are all popular retailers that have an online component, but are they able to grow their sales enough to make it worth investing in their stocks? The answer is yes, some are, and others aren't. Home Depots and Lowe's have done an excellent job of evolving. See, companies have to evolve to prove their value. And if you're evolving with the times, that usually means your sales are rising, right? So when I was growing up, we used to have dime stores like Woolworth and other brands and Gimbels, right? And those companies were right for the time, but could they survive today? Probably not, because how consumers get their stuff from retail outlets is a little bit different. So if you don't adapt, you die. And how do we track that on Wall Street? Based on your sales. So is there money to be made holding Walmart shares? Oh, yeah, because Walmart is a member of the Dow Jones Industrial Average, which means that there are certain tracking funds that have to hold those shares. Target, for example, is a member of the S&P 500, right? So their sales are stable enough for them to be part of an index, all right? I know I'm throwing a lot at you here, but there are things that you want to think about if you're really thinking of actively participating in the stock market, okay? So when we come back, I want to talk to you about two of my favorite sectors, which of course is technology and the insurance business, because there's a lot of growth to be had in those two sectors. And right now, those two sectors are making regular traders and investors like you and I into multimillionaires. We'll talk about that right after this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
And welcome back. Okay, so today we're talking about the idea of what sectors are you going to put your money to work in. We know there's money to be made in the oil sector and in retail, but those sectors are really for people who are trying to preserve their wealth, collect steady dividend income. For those of you who want growth, you're probably going to be drawn to either the insurance sector, if you know to be drawn, if someone has told you what's going on there, and mostly technology. So let's take a look at insurance right now. One of the things that disturbs me and excites me are certain stocks in the insurance sector are just on fire. Why? They're taking in more revenue than they've ever taken in the existence of the stock market, and the consumer doesn't realize it. So let's have this discussion here. Do you realize it's illegal to drive your car if you don't have car insurance in almost every state? You also can't own a home without homeowners insurance, which is bundled in your mortgage payment. Now, more people than ever have motorcycles and boats. All of these means of transportation require what? Insurance. Insurance companies know that. They've launched $100 million campaigns on television, the Super Bowl, the Oscars, to get you to think of them as your primary brand when it comes to insurance. And the tactic that they use to get your attention is the idea of bundling. Hey, you pay us as a one-stop shop and we'll cover all of your insurance needs. Well, that is true, and it is not true. It's certainly easier for most of us to be billed one premium on a regular basis, but it really doesn't necessarily benefit us. In other words, without naming a particular company, you could bundle your car and homeowners insurance. It doesn't mean that you're saving money. It means that it's an easier payment withdrawn from your checking account or billed to your credit card every month. What I'm fascinated by in the insurance sector is the size of the dividends that they pay the average investor and the sheer volume of money that they're taking in with this bundling notion as the driving force. So if you're a member of WI Trade School or you study with me, you know we've been looking a lot at the insurance sector and learning how to build a position in those stocks. Because remember, investing is all about the future, right? I don't think you should go out and put a whole lot of money in the insurance sector. I think you should choose 3 stocks that are doing very, very well there and let those stocks simply ride. and then you are simply adding more money over time. So I don't see the insurance sector as a place where you're going to instantly get rich, but it is a place where there is a lot of growth in this particular market. And finally, number one sector, of course, is technology. Now, in the technology sector, it's hard to define what is a technology business because Target is a technology business in the retail sector, right? So the way that I look at it is if you have a website, you're part retail and you're part technology. Well, who is leading or who will be the leaders in the future? I have to tell you right now, it looks like Microsoft and Amazon, just to name those two. Wherever there's new technology, they're putting hundreds of millions of dollars and investing in it so that they can lump that new technology. These days, it's artificial intelligence, generative AI, so that they can be the leader in that field. Now, you could also argue that Google is the forefront of new technology because wherever the eyeballs are, guess who wants to sell the ad space? That would be Google, right? You could also argue that Oracle is number one in technology because they're a data company. They track all the spending that we do online, what part of the United States, what time of the year. So these are all stronghold companies in the field of technology. Who's going to monetize it the most? Well, we have another company called NVIDIA, and they're developing entire platforms based on artificial intelligence, and not only for the software side, but also on the hardware side, right? Because when you and I log into a website, we're really on a server, right, that stores that website's information. Therefore, that server needs to pull up all the pictures and music and everything that we see on screen faster than it is now, right? If we want faster service when we log on to a server or go to a website, we need faster semiconductors, technology, to be able to call up that information for users like you and I. See, technology is so broad, but yet so fascinating. But we know it's the future, getting information to people even faster. That's why it is the dominant sector right now for Wall Street and investors. Because as you look at technology in the future, we may not be able to describe what a semiconductor is, how fast they run, what a data center is, how do we keep them cool, but we know we need and want faster technology in the future. So when you look at some of the stocks that are doing very, very well right now, you've got Google, you've got Amazon, and actually Apple stock is rising, but I feel like Apple stock is rising more on sentiment. There's a feeling that Apple is somehow going to be in on this new technology. I don't necessarily see the proof of it from a revenue standpoint, but who cares? I'm one guy with a dynamic personality who explains the stock market to people, and very often I'm wrong about new technology. To me, I'm okay with being wrong as long as I see where the revenue is growing, who's the biggest recipient of new technology, and who's making the most money. The mistake that I see very often is people who handle their own money, retail investors like you in the stock market, get greedy. And they only invest in technology. And that is the fastest way to lose money. Because if you've put all your money in AI stocks and AI turns out to not be the biggest thing, you would have been better spreading some of that money around in retail and in oil. But it's hard to say that to someone who has $30,000 that they want to turn into $3 million within 5 years. Investing to me is all about balance. You want a little bit of this, a little bit of that, and no matter how much you want to start with, you want to start as if you're in wealth preservation mode. That way, if your money doesn't explode in the technology sector, that's okay. You had a little bit of oil, you had a little bit of insurance, and maybe even some retail. Right? Because it's going to be hard to miss with that approach over the next 2 to 5 years. But when greed kicks in, greed is a very, very powerful force. The point of today's show is that you start thinking, do I have a little bit of oil? Do I have a little bit of retail stocks that are doing well? Do I have a little bit of everything so that no matter where the stock market goes over the next 2 to 5 years, you've participated in a way that outperformed your average mutual fund. You see, being successful in the stock market is not difficult. You just have to have, number one, a mentor, and number two, an approach to the market that is proven over time. And I've been wanting to mention this for a while. Stocks, whether it be oil, technology, they are assets. It's like buying houses. And when you do well in the stock market and you own stocks, they're assets that can be passed on to future generations. So if I had hundreds of thousands of dollars right now in the oil sector, I'm more than happy with the dividend collection because maybe someday I'll be passing those oil stocks on to my kids and my grandkids who will be the recipient of the price increases over the next 30 years. So you got a lot to think about there. And I know there's a lot going on in the educational field, but if you're listening to this show, you are a winner because at least you're now learning completely how the stock market prospers and functions. And if you could look at it from a sector point of view, you can participate in the stock market with educated and measured investments instead of just greed. Hey, if you want to know more about the Wealthy Investor approach, make sure you visit thewealthyinvestor.net. That is my website. You can hear all of my success stories from my students. If you really want to follow my trades and get that financial education, you have to start your membership at WI Trade School. Every single week, I'm posting lessons about the market, and I can show you in the charts what's successful and why. Remember, you're a winner because you're listening to The Wealthy Investor. I am a winner because I get to share all of my knowledge with you. I'll see you next week right here on the next Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.